Hi, this is Sean Hyman from mywealth.com, and I want to talk to you about our blog of the day, which is the stock market, how to enjoy a lot of the upside without a lot of the downside. And, I guess it was about 20 years ago now, I started in the stock market, didn't know how to read fundamental balance sheets or income statements, didn't know really the first thing about PE ratios or earnings or any of this type of stuff. It was really over my head at that point, and I'm sure a lot of people can relate. So what I had to do to gain profitability in the stock market at first, when I was first getting in, was to develop a simple concept and to define some things. And I'm a very visual person, so I did this on the charts. Now I want to show you exactly what I did and get into that concept. So let's get started.
Be sure to check out the written blog at www.mywealth.com/blog. Today's blog is Stock Market, How to Enjoy the Upside Without the Downside. Early on, I had to develop a simple plan of attack in order to get an edge in the stock market because at the time I didn't know fundamentals. In other words, how to read balance sheets, income statements, PE ratios, earnings, things like that. It's probably about 20 years ago or so. And so I really had to develop some way to get an edge while I was learning all the dynamics of the stock market, and that way I could, start making profits early on. And so what was this plan? Well, markets tend to trend, and so I needed a way to track short and long-term trends. And notice that's both of them. So I devised a simple way to know when to get into and out of a mutual fund or ETF. Now, you can do this with stocks or other instruments as well, but I really encourage you to start off, instead of it with individual stocks, to go with mutual funds or ETFs and on a cash non-margin basis. But let's take a look on the next slide, and I'll show you what I'm talking about. On this slide, we've got a chart, and we've got two lines. The upper line, which wiggles more, is the short-term trend direction. That's the blue line. The red line, which is the longer, more steady, stable line below it, is the long-term trend direction that we'll see right here. So on the left side of the chart, you have the short-term trend on top, the long-term trend line below it. But when you go to towards the right side of the chart, you see these actually cross over, and it breaks down right here, and the short-term line crosses under the long-term line. And so what I devised and did was, when the short-term line crosses above the long-term line and holds for just a short amount of time, I will start accumulating and buying into the mutual fund and buying periodically along the way. But what tells me to sell to avoid a lot of downside risk is when the short-term line dips below the long-term line, and that's when I close out of the position. And as you can see in this example, it would have saved just a precipitous fall. Now, with that said, this has bounced back, and actually is one of the few mutual funds out there in existence that that's a stock fund that's not in a downtrend and is still it recently heading higher, put it that way. And you've had your short line recently come back above your long line. So when the blue line is above the red line, just kind of recap here, I'm a buyer. When the blue line drops below the red line, which is your short-term trend that's being tracked, goes below the long-term trend being tracked, the red line, then I close the position in the mutual fund or ETF. Our stock investing course will show you the fundamental basis that forms these trends, while our currency investing course will teach you how to read the technical indicators, which can be used in any market you choose, because once you learn these indicators, they work the same for commodities, stocks, currencies, you name it. So here's the deal. For anyone who purchases any one of our 3 courses and emails me their login information as proof, I will in turn send the indicators that I use, where to find them for free, and the exact parameters that I use. I'll email this all in a document to you, and I'll also tell you which mutual fund we were looking at. That may be one of the few mutual funds out there to start a new uptrend. So you can email me at the email address below, which is shyman@mywealth.com. So don't wait. Get in a course and get educated today at www.mywealth.com, and you can click on the Courses tab to get started. Thanks so much.
Hope you enjoyed today's presentation. like I said in the PowerPoint, that anybody that buys any one of our 3 courses and emails me their login as proof, I will in turn send them an email that further defines this concept, that shows you what these lines on the charts mean, where you can go to set up these charts for free, and exactly the parameters I put in to use, as well as the mutual fund that I was actually using as an example that may be at a turning point. So email me once you've gotten your login to your course, and I will in turn turn around and send you that email document that gives you all the detailed information that I promised you as well. Thanks so much for watching.